Hi guys, so welcome back guys, welcome back to ProForex 101. So today guys we are going to be doing an educational session, okay, on candlestick patterns. One of our previous videos on candlestick signals was the exhaustion, okay, but today we'll be looking at the engulfing signals, okay. And we'll also get down to very tiny minor details of exhaustion signals and what they mean. Okay, same as what we did for sorry. Well, we'll figure out what the minor details for the engulfing signals are. Just same as how we did for the exhaustions. Okay. So all right, guys. So let's get started. um, we'll do this on our whiteboard, guys. One second. Let me bring that up. Okay. So same thing, guys. So okay, so let's look at some bullish signals first. Okay. So to be looking for bullish signals, we have to have had a previous downtrend. Okay. So let me draw some candles coming down. Okay. But so always when you're trading, remember this concept, guys. It'll help you out a lot. To be buying, you need to have sellers. Okay. So if you want to be buying, you already have to be in a downtrend. It's a very important concept. Otherwise, whose money are you taking? Right? There has to be sellers in order for you to buy. Let me fill that in. Okay, looking good. Right, let me do another candle which is smaller or similar in size, something like that. Okay. All right. Okay, here we go. So these are our downtrend candles coming down. It's been so basically it's a nice downtrend for a while. And then all of a sudden we get a bullish signal, which is a green candle. Okay. All right, here we go. Sorry guys, I think I picked the wrong color. One second. Let's do this again. There we go. It's better. So okay guys, so this is so you are already in a downtrend and all of a sudden you get a very strong bullish candle. Okay, but the significance of this is we call this whole thing an engulfing signal. Okay, not only this green candle, this red one and the green candle combined, right? So it's this whole thing that becomes an engulfing signal. Okay, some important points on this is that, okay, so if you're looking at the price action market, this candle market opened here, went all the way down here, closed, right? The next candle market opened here, and then we came all the way up here and closed up here. So the significance of this close is, guys, we are above the previous market open. Okay, it's very, very important. Okay, the moment that we close above the previous market open, that's when we can say, okay, we've got a nice engulfing signal for a reversal, right? And with this type of pattern, what will happen is market can reverse, and also this whole signal combined has to be bigger than the previous candle here, which is a bit small, right? I drew this smaller than this whole signal purposely, just to show you what you should be looking for. Okay, so if I cover all these 4 candles and then just show you this engulfing signal, it has no significance. It's once you compare it to your previous candles, and this whole signal itself is bigger than this candle, right? This candle is from here to here, and then when you compare that with this whole signal from this top to this bottom here, no, from here to here, and then we've got the signal is from here to all the way here. Okay, is bigger than the previous candle, right? So these few points are very, very important, guys. First thing is, in an engulfing signal, the close has to be above the previous open for a bullish signal. Okay, and it has to be bigger than the this whole signal combined has to be bigger than the previous candle. Okay, guys. I will draw you an example of a failed engulf, like a bullish signal where it doesn't engulf, and what will happen in this scenario is, so I'll draw this whole signal again here. Okay, something that will not work. Okay, so you'll have your bearish candle. These concepts, guys, very important. Okay, it's very, and as I said earlier in my in our exhaustions video, guys, it's very small subtle differences, and they make a lot of they change the meaning of the signal drastically. Okay, so let me draw another green one, which is gonna be your this one here. So if you have a scenario where the next candle, the green candle, is something like this, okay, okay, okay. So in this scenario, this whole signal cup, okay, this is your signal. Is it bigger than the previous candle? Yes. Okay, that's great. But however, guys, in this scenario, we did not close above the previous open. You see this? This is the previous open, and this is the market close. It's below the previous open. Hence, this is an invalid signal. Okay, guys? So again, let me put my tick. This is great. This is what we're looking for. This is not what we're looking for. In this scenario, what will happen is market may sideline or continue south. Continue south. Okay. Sorry. Yeah. Very important, guys. Just this subtle difference of just about closing above the previous open, it makes a very huge impact in your reversal signal. Okay, okay, so that's that. So let's have a look at the opposite scenario. Okay, guys, where we are in a, so these are bullish signals. Okay, these both of them are bullish signals. So let's look at some bearish signals. Okay. Okay. So again, to be looking for bearish signals, okay, you need to be in an uptrend. Okay, for this uptrend I'll just only draw a few candles. Okay, only 3. Okay, yeah, this concept of being so if you looking for sales, you make sure you already in an uptrend. Okay, this is so important that I can repeat this 1,000 times. Okay, all right, and then all of a sudden you get your signal, which is I would like to see another candle, guys. I'll do this. Okay, we and then next is your red candle. Okay, and the oh, and the criteria for this is that we close below the previous open. Okay, something like this. Surely let's do this so it's a bit exaggerated. Okay, okay, so here we go, guys. So that is your bearish engulfing signal. Okay, and that is these two candles combined. Okay, not the red candle on its own, these two candles combined. And these two candles combined, is it bigger than the previous candle from here to here? Yes, right? And from here to here. So okay, great. So that's a valid engulfing signal, and markets will reverse from these scenarios. Okay, okay, that's what we're looking for. And again, with the failed engulfing, it will be the same thing, opposite to this. Okay, so let me draw that again also, just to be very clear. So failed engulfing signal will be something like this. Okay, sorry, it can't be, it's not engulfing because it doesn't engulf the previous candle, so failed signal I'll call it. Okay, as the name suggests, in the engulfing signal, the red candle here in this instance has to engulf the previous candle, so that's why they call it an engulfing signal, guys. Okay, it's very straightforward, right? Okay, here we go, something like this, right? Okay, okay, there we go. So this is invalid because we did not close, the red candle did not close below the previous open. Okay, so in this scenario, markets may sideline or continue heading long. Okay, and then let me put a cross here saying that that is not a reversal signal. Okay, very important, guys, where like just like the exhaustions. Okay, these engulfing signals are very important, and reading them carefully can mean the difference between you getting into a winning trade or a losing trade. Okay, so yeah, guys, so let's look at some examples of these on our charts. Okay, so again, to go back to here, this is our bullish engulfing signal. Okay, bullish means market will be heading long, so we need to see candle signal that is bigger than the previous candle. Also, we need to see the close of the green candle above the previous open. Okay, and for the bearish signal, again we have to be, the whole signal itself has to be bigger than the previous candle, and the close has to be below the previous open. In this scenario, below, remember, this is above, below, opposite scenarios. Okay guys, so let's have a look at these on our charts, right? And so first thing, we'll have a look at this bullish signal, okay, which is okay, right here. Okay, market came down here, okay, with a red candle, and then look at the next candle all the way up here. We closed way above the previous open, and this whole signal combined, isn't it bigger than the sorry, so these two candles are the signal candles, right? And is it bigger than the previous candle? Yes. Great. What happened? Went long. Okay, reversal signal. Okay, let's look at more by examples. Here you'll see many reversal signals that they'll be more frequent than the exhaustions, okay, that we looked at earlier. For instance, right here you see a nice bullish reversal signal. We closed just above the open. Look at that, very small difference, but still it's bigger than the previous candle. Market went long. Okay, let's look at more examples. Here, bearish candle, and then we're on a downtrend. All of a sudden we get a big huge candle that closes above the previous open, engulfing the previous candle, and also this whole signal combined is bigger than this candle here. Great. Okay, yeah, you'll see many of these signals. Okay, okay, so I see a nice example of of this scenario. Okay, so now this here is an example where the market had a very nice green candle after the after the red candle, but it didn't close above, right? So let me get back to the charts. You see this here. Okay, markets were coming down, we came back up, but we failed to go beyond the previous open. Okay, what happened? Market went up a little bit, sidelined, and just crashed. Okay, and did a double bottom, and they went long, but that's another story. But this price action doesn't mean that we're gonna get a reversal. Okay, it just means market may sideline and or continue south. Okay, I mean this signal here. Okay, so this is a very nice example of a signal where we've got a nice green candle later on, but it didn't close above the previous open, so it's invalid. Okay. Whoa. Engulfing. So yeah, you'll see many of these guys. Okay. Engulfing, because this whole signal combined is bigger than this previous candle. Okay, and we went long. So yeah, okay guys, so let's look at some examples, sell examples. Okay, I think enough by examples. So that what we looked at was these two candles or setups. Yeah, so let's look at some sell examples. Let's get another pair. Wait, let's get euro dollar on. Okay. I see one here. Okay, we are going up, 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 up. All of a sudden, signal for a reversal. Nice red candle closing below the previous open, and this whole signal combined is bigger than this candle here, which is it's more doji, no significance. So great, this reversed the market. Okay, there are instances that the market may retrace halfway of the candles or whatever of the signal. That's fine, guys. Your stops are going to be higher, okay, above the signal. So and then market crashed. Okay, so yeah, that's one example. This is another example here, guys. Engulfing, uh, market closed below the previous open, bigger than the previous candle. This whole signal bigger than the previous candle. Bam, market went south. Okay. um, right here, engulfing, up, green green candle, followed by a very strong engulfing signal, and we closed all the way down here, and we are definitely bigger than the previous candle, the whole signal itself, and then we went south. Okay. This here is an example. Okay, so let's look at a failed scenario, right? Which is this scenario. So we were looking at this now. Let's look at this setup. Okay, where the markets will not reverse, they'll just sideline and continue. There we go. We were in an uptrend, right? We got a nice red candle coming through, but what happened? It did not close below the previous open, and also it's smaller than the previous candle. So anyway, this is not going to be a nice signal. Market just sidelined, and then we kept going long, grinding north. Okay, so it's no reversal. Let's look at more examples of these are old proper engulfing signals. With these type of where markets do not close below, sometimes they work, sometimes don't. So it's better to stay away from them. Okay. So whoa, crazy spike here. Okay, there's an example of one here where we had a bearish signal, but it didn't work out, right? Because we didn't close below the previous open. It came down a little bit, okay, sideline or retrace, and then continued going north. Okay, so yeah, guys, I think we get the point now, right? So what you need to be looking for is this type of signals where we are closing below the previous open, okay, for this bearish signal. All right. So okay, guys, yeah, hopefully this session was helpful, guys. Okay, and also if you hadn't seen the exhaustions video on YouTube, please do have a look at it. Okay, it's similar concepts that we discussed here. Okay. Yeah, guys, so that should be it for today, guys. Okay, So yeah guys, if you haven't already subscribed to our channel guys, please do subscribe and do share, okay, the videos, and also hit the thumbs up button if you like the video. And yeah guys, and also guys, hope to see you in our forums. Okay, the YouTube channel is our flagship, but our home base is at www.proforex101.com, okay, where we have discussions about trades and things like that. And again, joining is free guys, okay. So we have engaged in discussions about trades that we're following, okay, with other members. It's the best way to learn guys, okay. So all right, okay, so anyway guys, so thanks for joining in again guys. So I will see you in the forums or in the next video guys. Bye for now, have a nice day.